from each other. Optional units, those two fields could be kept separate. And so if one field got hailed on and one didn't, you could still trigger a loss on the field that got hailed on, but enterprise units will average them together. So in a situation where one field got hailed on and the other one didn't, you might not trigger a loss because the yield on the ground that didn't receive any hail damage might be great enough that it offsets the loss that the hail damaged field did. So that's enterprise units in a gist. A few years back, like maybe 5 or 6 years ago, they came out with enterprise by practice where you could split out your irrigated ground from your dry land. And so this way you could have separate guarantees for both and separate coverage levels for both as well. Then last year in 2022, they narrowed it down a little bit further where they allowed farmers to select enterprise by type. And this only qualifies so far to wheat, dry beans, dry peas, and sunflowers, but I am expecting them to expand the program further in the future, but we won't know about 2023 until probably a month or so from now. But this allows farmers to have one guarantee per type of crop. So if you're a wheat farmer in a dual wheat area, you can have a separate guarantee for winter wheat versus spring wheat and still receive that enterprise unit discount because the subsidy level is quite a bit higher on enterprise units. And then as you can see for dry peas, you can split up the different types as well, just for examples. In order to utilize this, you have to qualify for enterprise units in at least one of the types. And what that means is you have to have at least 20 acres of that type in 2 different sections. So a total of 40 acres minimum in order to qualify for that. Uninsured, unavoidable fire is kind of a mouthful. So most people just call it third-party damage. And this isn't anything new, but it's really beneficial, I believe, for organic farmers to be aware of it and how it works. This came out probably about 4 years ago. And what it does is it protects your APH from any sort of third-party damage. So most often in this industry, we hear about chemical spray drift. So that's kind of the scenario I'm going to go over today. So if you suspect that your field had chemical spray drift on it from a neighbor or whoever may have been spraying, you need to file a notice of loss with your agent indicating that it was third-party damage. And then as long as you follow all the processes, which I kind of have a guide on the next screen, you can actually exclude those acres from your APH to avoid having a reduced yield overall. Because like I said, you take a 10-year average. And so if you have 1 year where your yield is very poor, that could really impact your overall guarantee on your operation for potentially 10 years to come. But in this situation, if you file it and follow all the processes correctly, then you can remove those acres and basically have it like the year never happened. So you don't take a reduction on your yield. So here's an example of how that works. So this farmer has 100 acres of corn, and he declared that 30 acres of them were damaged due to third-party loss. So this farmer called his agent and submitted a notice of loss stating that there was third-party damage on his field. From there, an adjuster comes out to look at the field, and in this situation, he said that the 30 acres were damaged. He agreed with them on the amount of acres, and then he said that the lost acres, those 30 acres, had about 5,700 bushels potential, and then he said 300 of those were undamaged, which means that there were 300 bushels probably harvestable around the borderline of where the damage started. For the remaining 70 acres, this farmer was able to harvest 12,000 bushels. So he had an average of 171 bushels per acre on those 70 acres. If the farmer didn't call his agent, file a notice of loss, do a modified acreage report showing those acres are damaged, he would have a new yield in his APH of 123 bushels, and that would stick with him for 10 years. However, since this farmer followed all the correct processes, he can remove that yield from his APH, and he now has a yield of what he actually harvested of 171 that will stay with him for 10 years. So as you can see, following the correct steps on this process can be vital to whether your yield will take a really big hit for the next 10 years. Beginning farmer rancher isn't anything new either, but I wanted to bring it up because it can be really useful to sons or just anybody just wanting to start out in farming. So this provides benefits for farmers for up to 5 years after the farmer turns 18. And then he can exclude some of those college years as well if he doesn't want to take advantage of these benefits until he's done with college. So the biggest benefits on there are waived administrative fees, an extra 10 percentage points of additional subsidy, and then yield adjustment, which is if the county has, or if your yields have a very low yield, like if you well, for my farm, I guess this year we had 5 bushel corn, so we had a very low yield. So instead of having 5 bushels in our 10-year APH database, we're allowed to substitute that for 60% of the T yield. For beginning farmer ranchers, they're able to use 80% of the T yield instead of 60%. So it gives them a little bit of a bump there. But the biggest point in these beginning farmer rancher benefits is that extra 10 percentage points of additional subsidy. A lot of times I see where it's a son coming into the operation and then he's able to use his dad's yield to establish his history. So you look at the two policies side by side, and the son is able to go up an entire coverage level and get better coverage than the dad with paying the same premium rate because of this additional 10 percentage points. Pasture rangeland forage is one of my favorite crop insurance policies for a couple different reasons. But what it is it ensures any haying or grazing land based on lack of rainfall in the area. So it is not based on any sort of yield, it is just lack of rainfall. This policy is index driven, which means it is all based on a deviation of average. So they look at the NOAA weather data all the way back to 1948 for your specific area. And what I mean by your specific area is a grid of about 17 by 17 miles. Then they determine that average all the way back to 1948 as 1.0. The highest coverage level you can have on this policy is 90%. So anytime the rainfall for the time periods you select falls less than 90%, you trigger a loss. A time period that you insure is 2 different months. So, and you have to insure 2 different intervals of 2 months each. So January, February would be considered one, and March, April would be considered a different interval. So that would be your 2 intervals. However, you're not maxed out at 2 intervals. So if you want to split your insurance up through all the months throughout the year, you have the ability to do that by insuring all 6 intervals. One of the main reasons I like PRF so much is it allows for more flexibility than your typical crop insurance policy. This program allows you to pick and choose which acres you want to insure, where if you have corn on your crop insurance policy, every acre you plant to corn has to be insured. So this one, if you just want to insure 1 field of alfalfa or maybe 1 pasture, you're able to do that without any limitations. Another main reason I like it is it's very stress-free for the farmer. So the farmer doesn't have to report any yield or rainfall data for his area. They just follow all the NOAA weather stations that are closest to your area. And if the rainfall is triggered less than that 90%, a claim is automatically opened, and then they pay it typically about 60 days after that time period is over. Sales closing for this policy is December 1st, which is coming up quick. And here's a little bit of an example of how it works. So as you can see at the top, it says grazing grid 27730, which is pretty much a foreign language to most people. And so what that is that's my grazing grid over by Scotland, South Dakota. So these are my real numbers. And the next line is showing how I split up the acres. And so typically when I'm looking at these policies, I look at the most previous 10-year weather history to see what months have paid and what months haven't. And then I kind of try to structure my insurance based around that. So for my land, I was better off if I did 40% of my acres in February, March, 10% in June, July, 10% in September, October, and 40% in November, December. So that's what all those little letters and numbers mean there. So here you can see over a 10-year average how it has paid out for my operation. So that first column shows the indemnity, which is the loss amount that was triggered per year. And then the next column shows the premium, which was at that point in time, $8 per acre. I ran these numbers about a year ago and just haven't updated them for the PowerPoint. And then that last column shows the profit, which is just the indemnity minus the premium. So here you can see over 10 years, my farm shows a profit of $111 per acre over 10 years. So really on an average basis, if you average it out through the 10 years, we'd have $11 per acre profit per year off of this policy. One thing to note on this is you will not collect on this policy every single year. As you can see, 2018 through 2020, we received quite a bit of moisture and did not collect on it. However, with this policy, in my opinion, if you stick with it and sign up the policy and stick with it for the long haul, you will always see a return on your revenue under this policy. So 2021 was fairly dry for us, and so was 2022, very, very dry. So we did see some revenue off of that over those 2 years. Contract pricing is one of the biggest benefits, in my opinion, that organic farmers have when it comes to crop insurance. And so what this does is it allows you to substitute that crop insurance price that we talked about, like that $11.72 that we talked about on the corn, for your specific contract price. So without that, you have to use the RMA established crop insurance price if you don't have any contracts in place. So typically when you're calculating your crop insurance price, they look at it, like I said, 2 times per year. So what they do is they look at the Board of Trade. The entire month of February, they look at the average daily closing price throughout the entire month of February, average it together, and that's the spring price. And then they do the same thing in October, where they look at the daily closing price and then average it together throughout the whole month. Now, I think we're all well aware that the Board of Trade is only trading conventional crops. So they look at the conventional crops and then take it by a factor to figure out what an organic price is. So it's really not at all what organic prices are actually going for. It's just all based on the conventional price. So here you can see over the last 5 years, they used a factor of 2.26 on average on corn of that conventional crop insurance price and 1.94 on soybeans to come up with the organic price. So I think it's pretty safe to say that most crops are just 2 times what the conventional price is set at. In order to utilize contract pricing, you have to have this special option on your policy by sales closing, which is March 15th for most spring crops. And then you have to submit your contract to your insurance agent by acreage reporting, which is July 15th. In my opinion, I think it's best for organic farmers to just put this option on their policy to have it in place in case you want to use it. If you don't have a contract by July 15th, or if your contract isn't higher than what the crop insurance price is, you just don't have to submit it, and then you don't pay any extra for this, having this option on your policy. So I think it's best to just have it in place just in case you want to use it in the future. There is a cap as to how high you can go on these policies. So contract prices for corn is capped at 1.5 times the spring price and 1.75 times the spring price on soybeans. So here's an example of how it could change your crop insurance guarantee. Here on the left, you can see this is a soybean example. We have a bushel guarantee of 48 bushels per acre times the crop insurance price, which was $27.41 in spring of 2022. This gave us a guaranteed revenue of about $1,300. On the right, you can see we substituted that contract price, which a lot of contracts were going for $38 per bushel this past year, instead of that crop insurance price of $27. And so here you can see it actually increased his guarantee up to $1,824. So that $500 per acre could make a huge difference for farmers, especially in a year like this where we're very drought stricken. So a nice policy to have in place. And in my experience too, farmers are better off utilizing this than increasing their crop insurance coverage, because the premium will go up when you use contract pricing because you're getting a higher guarantee, but the premium doesn't go up as much as it would have if you increased your coverage level, because that changes the subsidy levels with it. Relay cropping is a new policy that was in place for 2022. And what this does is it allows farmers to insure their relay cropped soybeans through a written agreement. Your written agreement has to be submitted by March 15th, and there are some qualifications for certain zones, which I'll just show that map here. And what this means is a lot of times we also hear it called interseeding. So it's when you're planting your soybeans into an already existing crop. And so here you can see the NRCS zone map. And so zones 1, 2, and 3 need to have prior history in order to qualify for written agreement on this. And so that means they have to show proof of 3 years of relay cropping before they can receive insurance. But zone 4, which covers most of Iowa, doesn't have to have any previous history in order to obtain this coverage. Double cropping is kind of a similar situation, but it's where you grow one crop, harvest it, and then plant the soybeans and grow the other crop. So this was new, that they expanded it in 2023 to areas that are in the Midwest for us. So they expanded it both for soybeans and grain sorghum. I did not include a map on grain sorghum because it doesn't touch Iowa, but if we have anybody on this presentation that wants to see it, feel free to reach out and I can provide that for you. But here you can see the blue area. You can have coverage already readily available without having to submit a written agreement. And then that green area, you can submit a written agreement without having prior history of double cropping. So that first year you want to do double cropping, you can submit the written agreement and get insurance on it. And then that yellow area, you have to submit a written agreement with 3 years prior history in order to obtain insurance on double crop soybeans. Whole farm revenue protection is a whole nother policy that's really good for the organic or diverse farmer. So this is another option for farmers that don't have coverage available in their counties. So what it does is instead of protecting a yield for your crops, it protects the overall revenue over your entire operation. So the guarantee for this policy is based on previous allowable revenue versus your expected revenue. So they look at the most previous 5 years Schedule F tax records and look at your revenue off of that, and then compare it to what you think your expected revenue is going to be for the upcoming year. They take the lower of those two numbers, and then they multiply it by your coverage level to come up with your guaranteed revenue for your operation. In order to insure under whole farm revenue protection, you have to have 5 years of consecutive farm tax history. Beginning farmers get a little bit of a break here where they only need 3. And then coverage level options are available from 50% to 75% if you have 1 or 2 commodities. However, if you have 3 or more on your operation, you are able to insure at 80 and 85% as well. So the biggest benefit to whole farm revenue protection is it can cover virtually any crop other than timber or livestock for show and sport as part of that list too. But if you're thinking of growing a very specific crop like fava beans or something more specialized that crop insurance won't be readily available on, this is a way to get insurance without having to have the 3-year prior history. So this works very well for diverse farmers for that reason, because you can insure your fruit and vegetables under this as well. Or farmers can use this as an umbrella policy if they already have insurance on their traditional row crops. You can use this as an overarching umbrella policy over your entire operation to make sure that you're guaranteed a certain amount of revenue. The biggest downfalls or hiccups that people see in this policy is there is a lot of paperwork involved. Like I said, you have to have those 5 years of tax history before you can even obtain a quote as to how much it's going to cost. And then there's a lot of forms as the years go on as well to fill out yields and revenue and all of the things that are required under this policy. The other downfall to whole farm revenue protection is that claims are much more delayed on this rather than your standard revenue protection. So typically farmers are used to harvesting the crop, and if they fall under their guaranteed yield or revenue, they call their agent, file a claim, and typically it's wrapped up within the next month and you receive your claim check. Under whole farm revenue protection, since it's all based on Schedule Fs, you actually have to wait until you file your taxes for that crop year before you see if you can trigger a claim. So realistically, you probably won't collect a claim payment on this policy until May timeframe instead of in November, December, like you're used to. So why is it important to work with a specialized agent? And when I say this, I don't mean that it has to be with me. This webinar is purely educational, and I just want everybody to be aware of it. So I think it's important to work with a specialized agent, so you're working with someone that has the same level of understanding with you. A lot of times it just works really well to talk to someone that understands what you're talking about. They know the National Organic Program standards and kind of the extra processes organic farmers have to go through. It's important to work with someone that's going to do a personalized farm assessment on your operation. And that might mean choosing a different multi-peril coverage level versus hail and wind if that's what you need to do, or submitting written agreements if you're not able to have insurance on some of your crops. And this might mean that your coverage does not look the same as what your neighbor's is, but that's okay because crop insurance coverage should be narrowed down to the specific farmer. You want to work with an agent that's going to make sure that your crops are insured at the contracted price. This is kind of one of the only ways that farmers can truly individualize their crop insurance coverage by using their price rather than the board price, which makes it such a big advantage to organic farmers. And there is a list of crops too that can achieve the contract pricing that are not organic, but it is a very limited list. You also want to work with an agent that's going to guarantee that all the paperwork is submitted timely. There's extra paperwork involved with organic farmers on the crop insurance side, as I'm sure everybody assumes, because organic farming involves a lot of paperwork as it is. And so I have seen a lot of scenarios where maybe the agent didn't submit the organic certificate or the contract price in time. And if they don't do that, then your claim could be in jeopardy for the year. And so I've actually had the situation where the farmer didn't submit, or the agent didn't submit the organic certificate. And so at claim time, the adjuster came out and they said that, you know, we don't think that you're farming organically because we don't have a certified organic certificate for this operation. And so they ended up paying the claim as transitional organic instead of certified organic, which is typically about half of the guarantee. So the farmer was short about half of what they were expecting for the year. I also think it's important to work with an agent that's going to advocate for better crop insurance coverage specific for you as an organic farmer. I know I've been advocating for quite a few things and some changes on whole farm revenue protection that's been working out pretty well, but you just want someone in your corner that will fight for you to try to make things better in the crop insurance industry. The Transitional and Organic Grower Assistance Program is newly announced maybe a couple months ago, and it is in place for the 2023 crop year. We are hoping that they extend this out to future crop years as well, but they've only announced it for 2023 at this point. You'll probably see emails about it called TOGA because everybody in crop insurance loves acronyms. So TOGA is the best one they came up with for this one. And so what this, excuse me, I'm going to take a drink. What this does is it allows extra premium assistance for organic farmers. So transitioning farmers are able to receive an additional 10 percentage points of crop insurance subsidy. And then certified organic crops are able to receive an extra $5 per acre of premium discount, which is basically $5 an acre of extra premium subsidy as well. I don't have it on this list, but whole farm revenue protection policies are also eligible for the extra 10 percentage points of subsidy. Here you can see on the bottom the entire list of crops that are included under this TOGA, which is pretty much every crop. So there's really not a lot of limitations there. But I also think that this is a really good opportunity for organic farmers to make sure that their crops are insured at the level that they should be. From all the announcements that I've seen, they are just going to apply the premium credit to your billing statement next fall. And so when agents are going in and keying your information and running quotes as to what coverage level options you have for the coming year, the quotes will not reflect this $5 per acre discount, and so that will have to be manually calculated. So I advise you to keep this in mind when you're choosing your coverage level, because realistically, in a lot of situations, you could bump up a coverage level and still be paying the same premium you did last year and get the extra guarantee because of this extra benefit that's on there. So keep this in mind as you're making your coverage elections for the coming year. And then I just kind of wanted to give a shout out here to the Center for Rural Affairs. They do an excellent job advocating and educating on crop insurance coverage, and they've developed some really great resources for small grains producers. They have other ones as well, but these are the ones that I have here. So here's kind of a highlight on some of their paperwork that they have put out. And so if you would like some information, I would suggest going to their website and pulling these resources off of there. But they're really, really good advocates for organic crop insurance, and I've done quite a bit of work with them. So I kind of wanted to bring that to everybody's attention, that there are resources out there from a third-party nonprofit rather than just hearing it from an agent. And that's kind of the gist of what I have today. Do we have any questions, Olga?
Yes, we do have some questions, and actually there was an interesting situation. Zoom kicked me out probably after, you probably went through a few of your slides and Zoom kicked me out, which was like the strangest thing ever. I've never seen that before. So I might need you to repeat a few of your slides from the beginning just so that I have it for this recording, because it did not record the initial few slides, if that's okay.
Okay, yep.
And then thankfully, I was glad to see everybody was still on, so I'm not even sure what happened there. Eric has a question. He said, does enterprise by type help to for those transitioning, example, enterprise conventional corn by itself and enterprise organic corn by itself? Separate AP
great question
coverages. Yes. Okay.
Yeah, that great question. And I did forget to address that. So I appreciate you asking. At this time, no, they don't see a difference in type by choosing organic or conventional or transitional. I would really like to see them change this. And I think it makes complete sense to have separate enterprise units by organic practice. But they have not recognized that yet. I have voiced my concern and suggestions on it. We will see if it gets changes, but that is one of the things I'm trying to advocate to make changes on, because I think that is very important. So unfortunately at this time, no, but hopefully more to come.
Okay, and Eric has a follow-up question. He said, how can we help advocate?
Well, I actually see on here that Kate Hansen must be on and posted. She is a great resource to help make changes. So she posted her email in here. A lot of times this is better coming from a third-party resource, so I would reach out to her. I also used to work with the RMA administrator that's currently in office, and so I've reached out to her on a couple different things, so I'm able to get some things pushed through that way. But Kate is a really great resource to kind of go through the correct avenues to make change happen.
Yes, yes, and Kate's email is listed here in the chat box for those of you that want to connect with her. She is with the Center for Rural Affairs.
Yes, and I should add on that, I don't mean to like just shout out about Kate constantly here, but one thing that we are trying to work on together is to allow maybe extra planting time for organic farmers. So right now, organic and conventional farmers have the same final planting date as far as crop insurance is concerned. And I think we're all well aware that organic farming is just different than conventional. And a lot of times they end up planting later. And so what we're trying to do is advocate for more flexibility for organic farmers, that they can maybe plant a few days later and not receive any penalties for it. And so Kate is actually right now searching for farmers that would be interested in helping advocate for that and maybe write a letter. So please reach out to her as well for that, so we can get some of that pushed through.
Perfect. Love hearing that. You guys, are there any other questions? This was a lot of great information. It's always so fascinating to learn about the various crop insurance types and the way that it works. I want to give you guys the opportunity to type in your additional questions, or feel free to unmute yourself. Do as you see fit. And if, of course, if there are no further questions, I want to give a housekeeping announcement. What I will do is I will follow up with everyone that RSVP to this meeting with a survey link. Your answers help us, determine best ways that we can, help you further, and ways that we can improve our programming, and also for grant reporting purposes. In addition, I will also share a YouTube link to this recording on our YouTube channel. So yeah, if you don't mind taking a few minutes and sharing your survey responses, that would be greatly appreciated. In the meantime, if there are no additional questions, you guys are welcome to drop off, and I will stay on with Megan just a little bit longer so we can do a quick recording of the initial slides that did not record with Zoom. So thank you everyone for joining today. Catherine,
yes, thank you very much.
Yeah, Catherine said super informative. Thank you, Megan.
Oh, no, and thank you everyone for joining. I think it's just great to kind of share the information and make sure that everybody knows some of the options that are available to them, because they're not near as talked about as they usually are. And I know, like, I'm working with the Organic Agronomy Training Service, and we are trying to change that. So we're developing a course for crop insurance specifically for organic and specialty farmers. And so there's more information to come. I just really would like to spread the word. I just feel like there's a lot of information missing, and it's time to get the word out and make sure that all the farmers are aware of everything available to them. So thank you all for listening.
Yes, Aaron Lehman said, excellent presentation. Thank you. Yes, I couldn't agree with you more, Megan. Thank you for all the work that you do in addressing this and spreading the word about all the options available to our organic farmers.
Yes, happy to.
Awesome. Well, Megan, we'll let people kind of trickle out if they want to, or stay on whatever they want to do. Do you mind going back to, I want to say it was slide 1 through 1 through 12?
Did you catch this?
Totally. Yes. So do you mind just kind of doing another run of that? That way we have it in the recording. I'm so sorry. I'm not sure what happened with Zoom there.
That's okay. Sorry, I'm just kind of getting out of my chat box.
You bet.
Okay, so dry run number 2, I guess.
Yes, please. Thank you so much.
Yes, so here are some of the crop insurance options available for the organic farmers. Okay, so the topics I'm going to talk about today is, first of all, how does your crop insurance policy work? What triggers a claim? What even is crop insurance in general? Some recent crop insurance changes that came about in the last couple years, some insurance options available specifically for the organic farmer, and the Transitional and Organic Grower Assistance Program, also known as TOGA, that is available in 2023 for organic farmers. So before we take a deep dive into the exciting world of crop insurance, I thought I'd tell everybody a little bit about myself first. So I was raised on a farm in Northwest Iowa over by Granville, where we had corn, soybeans, and had hogs as well. From there, I went to South Dakota State University, where I graduated with an agricultural business degree, which led me to my first job in crop insurance. So crop insurance has kind of been the bread and butter of my business ever since from the start. I currently farm with my husband's family in Southeast South Dakota over by Scotland. And a few years ago, I took a look at the crop insurance industry and realized that organic farmers were not very well represented. It seemed like most agencies had 1 or 2 organic farmers on the books, and they didn't really pay full attention to them because the corn and the soybeans conventional farmers were the bread and butter of their business. So they were paying more attention to them, as they should. But I saw that as not being right for the organic farmer. And so it seemed that they were lacking quite a bit, and they didn't understand all the knowledge and options available to them. And so I saw that as an opportunity for me to grow my business and start out on my own. And so I formed Northbourne Organic Crop Insurance so that organic farmers specifically could have someone that understood their operation and could advocate for them and make sure that they had the options in place that were specific to their operation. So here's a little bit about how a crop insurance policy works. So crop insurance protects you from any natural peril that may happen, which most often we see that being weather related. So any like hail, wind, freeze, flooding, a drought is a big one. And then on revenue protection, it can also protect you against a revenue loss due to price changes throughout the year. Coverage levels are available from 50% all the way up to 85% in 5% increments. So this allows farmers a little bit of flexibility that they can choose a coverage level with a price point that is comfortable for them and a coverage level that guarantees all the revenue that they need on their operation. Crop insurance is part of the Risk Management Agency, which is an offshoot of the USDA, so it is all federally subsidized. And here on the bottom, you can see a subsidy chart. And so the most common lines that farmers can focus on are optional units and enterprise units. And so as you can see, under 50% coverage on enterprise units, it's showing 80% crop insurance subsidy. And so what that means is the government is paying 80% of the premium. So the farmer is only in charge of paying 20% of that crop insurance premium. So that's a little bit of how the relationship works with the government as far as crop insurance goes. Policies are available by crop and by county. So this allows farmers a little bit of flexibility where they can insure one crop and not another, or they can just have insurance on one county and not another if they farm in 2 different counties. So why is crop insurance important? Why are we talking about it today? Crop insurance is the only input cost that can actually guarantee you some sort of revenue on your operation. So you can plant your seed, put down your fertilizer, whatever inputs you might have on your operation. But if disaster strikes and we have no yield in the fall, they won't promise you any sort of revenue. Where crop insurance is in place to make sure that you are able to get some sort of revenue and keep afloat for the next year so that you can continue farming. So here's an example of how a crop insurance policy works. And this is on corn. So on the left, you can see a bushel guarantee is calculated by taking your approved yield. And in this example, we have 200 bushels. And this means that over the last 10 years average, this farmer raised 200 bushels per acre average on his corn. Then he selected an 80% coverage level, which I'd say is one of the most common coverage levels that farmers select, to get a bushel guarantee of 160 bushels. Then, so that means that come harvest time, if he has less than 160 bushels that he harvests in the fall, he automatically triggers a claim. On the right, you can see how the revenue guarantee is calculated. You take that 160 bushel guarantee that we just calculated, and then take it times the crop insurance price of $11.72. And this was the price for 2022. That gives you a guaranteed revenue of $1,875. So your crop insurance policy and guarantee can change throughout the year depending on where the prices are sitting. So the example on the left shows what happens if the harvest price ends up being higher than the spring price came in at. So in this situation, you take your 160 guaranteed bushels and you multiply it by the harvest price instead of that spring price, because you're able to use the higher of the two. And so here you take that times 1280, which is just an example for what would happen if the price was higher, to give you a new guaranteed revenue of $2,048. Then on the right, you can see how to calculate the harvest or the new guarantee if the harvest price is lower. So you take your original guaranteed revenue that we had calculated on the previous slide, the 1,875, and divide it by the harvest price of $10.75. This gives you a new bushel guarantee of 174 bushel. With this new guarantee, now instead of having to fall less than 160 bushels to trigger a claim, you only have to fall less than 174 bushels. So this calculation might seem a little bit funny or odd how we do it, but really, with the price being lower, it takes more bushels to reach that guaranteed revenue. So now we all have a higher bushel guarantee than we did with the spring price. So is crop insurance coverage readily available in my county? And what do I do if it is not available in my county? So here's a map pulled from the USDA that shows the crop insurance coverage availability for corn across the US. So any county that is colored green is where coverage is readily available. So as you can see, it covers pretty much the entire US, and there's only a few select areas that cannot have crop insurance coverage on their corn readily available. So here's an example for soybeans. As you can see, it is not covering as much of the United States, but it's probably very well targeted in the areas that actually do plant soybeans. And it's still covering the whole state of Iowa. Here's a little bit more specialized coverage of oats, where it's still covering the entire state of Iowa, so we're able to get coverage pretty easily there. Now you get into a more specialty crop like sunflowers, which isn't typically grown in Iowa, but organic farmers might add it to their rotation just to kind of add another crop in there. And so as you can see, the whole state of Iowa is white, meaning coverage is not easily available. And so what do you do if coverage isn't available in that county? A written agreement is the first option that I would pursue if I was in one of those white areas. And what this does is it allows producers to apply for individual coverage on that crop if the crop isn't readily available. On the bottom, you can see a bunch of different types where you can use the written agreement to your advantage and apply for different coverage. So I'm mainly talking about that XC, which is the county without actuarial documents, where you can request coverage for the crop in that county. And in order to insure the crop, you have to submit an application with supporting documents. And this is all due by sales closing, which is typically March 15th for most spring crops. And the supporting documents often require a letter of adaptability, which is just an agricultural expert, most often NRCS gets involved in this, saying that that crop can be produced on this soil in this area. Production history, they like to see 3 years of history of either your crop or a similar crop, and there's an entire chart that you can go through to see what qualifies as a similar crop. And then details of coverage, which is like your coverage level that you would like to insure at. So that's for the XC, which is the county without actuarial documents. Then some other common written agreement requests that I've seen are the high risk written agreement. And so what this does is it allows you to get crop insurance on your high risk land as if it wasn't high risk land. So typically on a high risk policy, they're going to charge you higher premium rate on those acres. And then your county average yield is also going to be quite a bit lower because it is rated high risk. So if you can prove that you have a history of growing the crop and you've been getting similar yields to other neighbors or other people in the area as if the ground was normally rated and not high risk, then you're able to get insurance as if the ground was not rated high risk. New breaking is another very common one, and this applies to coverage for acres that were not planted and harvested in one of the 3 most previous crop years. And alfalfa is an exception to this, since a normal alfalfa rotation can be 5 to 7 years. Since that's part of the normal rotation, you don't need to submit a new breaking written agreement on that. So this a lot of times qualifies for maybe grass, hay, or native sod acres. Do I keep going, Olga, or do you have these?
Yeah, let's keep going to slide 13. So let's do this one and then the next one, and I think we should be good.
Okay, sounds good. So enterprise units is an option that farmers have, because when you select a crop insurance policy, you have to select what kind of unit structure you would like. And so most common, we see optional units and enterprise units, which I touched on one of the first slides. And what that kind of means is optional units is where you can separate out the guarantees per section. So for example, if you have 2 fields that are across the road from each other in 2 different sections, you can have a separate guarantee for each field. So if one field gets completely hailed out and the other one does well, you can still trigger a loss and collect a payment on the field that got hailed on while still having a good yield on the piece that had a normal crop year. Enterprise units is another option where you can average all the crops together in that entire county to see if you trigger a claim or not. And enterprise units has quite a bit of higher subsidy level, so the premium is quite a bit cheaper on that one. And so by doing this, if we have the same scenario where one field got hailed on and the other one didn't, they would be averaged together. And so if your field that had a normal year produced high enough, you might offset a loss on there because it could have produced enough that it really kind of averaged out that you didn't trigger a claim, even though one field did get hailed on. So it is riskier, but it's quite a bit cheaper as well. So we see it very common. Quite a few years back, they added a new coverage option under enterprise units. And so they allowed for one guarantee for irrigated and one guarantee for dry land. So you could do enterprise by practice. And so you had a completely separate calculation for irrigated and dry land on whether you would trigger a loss or not, which is very beneficial to farmers that have both. And then in 2022, they came out with a new enterprise by type option. And as of now, this only qualifies to wheat, dry beans, dry peas, and sunflowers, but I envision them expanding this in the future to more crops. And so this allows for one separate guarantee per type of crop. So for those of you that live in a dual wheat county, you can have a separate guarantee for your winter wheat and your spring wheat rather than averaging them together while still getting the enterprise unit discount. And then like for I would hope that they would expand it to like corn as well, where you can have a guarantee for grain corn and a different guarantee for blue corn if you're farming both of those. As you can see, I have an example here for dry peas as well. In order to qualify for enterprise units by type, you have to qualify initially for enterprise units in at least one type to get that extra subsidy increase. And so in order to qualify for enterprise units, you have to have at least 20 acres of that same crop in 2 different sections, minimum. So 40 acres minimum in 2 different sections. Uninsured unavoidable fire is a little bit of a mouthful, so most people just call it third-party damage. And what this does is it protects your APH from any third-party damage that may happen on your operation. Most often we see chemical spray drift being the thing that triggers this. So in order to remove those acres from your APH and not take a hit, you have to file a notice of loss stating the third-party damage, and then you have to submit a modified acreage report showing that those acres can be removed from your APH. So like I said, an APH is 10 years history. So if you had a year where you had chemical spray drift and really virtually no yield, your APH would show a 0 in that 10-year history. And so this, instead of making it 0, is kind of like taking the year out as if the year never happened. So here's an example of how the third-party damage works. Do you want me to go through this, Olga?
I think we should be good here. I think that's where it started. I'm so sorry. I'm not really sure what happened with Zoom there. That was the first time that it's ever happened. Yeah, it kicked me out. I initially thought that your screen froze, but it actually kicked me out of the room. And then when when I joined the room, you were still going and everybody was still on, even though I'm the host of the Zoom meeting. So it's the most random
Yeah.
thing ever. Thank you so much for going through these additional slides. At least folks can, see everything on the YouTube. And thank you to Adam, Kevin, Matt, and Mike for sticking around here for a second run of the presentation. So, yeah.
When we were on, Olga, it was saying like, you have stopped recording and then you're now recording again. So it was like, you could tell something was going on, I guess, is my point.
Yeah, and I apologize. Totally outside of my control. It did a really weird thing, but hey, you know what? We have the full version now, and I'll post it on YouTube. And thank you everybody for attending and sticking around to the end. And Megan, thank you so much for redoing this. I really appreciate that.
Absolutely.
All right. Well, you guys, I'll be sending a survey and a YouTube link to this recording if you want to revisit it. Obviously, you have Megan, if you want to share that last slide with your contact info for these guys in case they want to connect with you. Megan is a wonderful resource. We're super grateful for everything she does. So definitely connect with Megan if you need help with crop insurance.
Yeah, thanks for listening to round 2.
All right. Have a good day, guys.